and Bitcoin just needs one final dump below $60,000 to move to the upside.
The next 24 to 72 hours for the markets are going to be the deciding moment.
Iran is charging transit fees through the Strait of Hormuz equivalent to $1 per barrel of oil, but it must be paid in Bitcoin. This is the most important geopolitical Bitcoin story nobody's talking about.
But 77K is the level to break for a pivot, at least in my stance, to go from bearish to bullish.
Do you really believe the headlines about a ceasefire? Don't be so sure. While retail traders are waiting for a rally, a liquidation wick is being prepared behind the scenes. From wild predictions to the secret plans of institutions, we've collected 11 opinions from crypto YouTubers so you can form your own opinion on today's market. Bitcoin at $40,000 or a surge to a new high? Find out right now. Thomas is sounding the alarm. Global diesel and gas shortages are becoming critical, threatening to finish off the already empty pockets of consumers. He calls the current Bitcoin rally fake and believes Trump is simply manipulating the markets ahead of the futures opening. In his view, there is about an 80% chance that a real deal with Iran will not be reached. His advice? Stay frosty. If Iran doesn't reopen the Strait of Hormuz, inflation will go through the roof, marking the end of the current economic recovery. Now for the heavy macro. Benjamin Cowen has updated his bear market resistance band, and it's a reality check for the bulls. The critical 21-week EMA is now at $78,000 to $79,000. Historically, this zone has been an iron ceiling in every bear cycle. Cowen warns that with oil spiking and liquidity drying up, we are in a late-stage business cycle. Bitcoin remains trapped despite the local bounce. The verdict? A 70% chance of a new low. Ben is eyeing an October bottom in the $40,000 to $50,000 range. Watch the macro, not the noise. Moving on to crypto Rover. He's tracking a massive market shift triggered by the recent US-Iran ceasefire and a historic oil crash. Rover notes that while Bitcoin spiked to $72,000, this rally is primarily retail-driven, meaning the normies are FOMOing in. He warns that Bitcoin is still trapped in a massive consolidation range and needs a clean breakout to turn bullish. His plan? He's looking to open a major short at $84,000. Rover expects the final market bottom to hit between June and October, potentially in the $45,000 to $60,000 zone. But while some are waiting for lower prices, Carl from the Moon Show is taking a completely different approach. He's doubling down. Carl admits he was wrong about the $1 million prediction for 2025, but he argues that Bitcoin is currently massively oversold on the RSI. He believes the only thing missing for a vertical move is a global financial crisis, which will force central banks to print money again. For him, any dip is a gift. Carl's move? He's literally considering selling his Bugatti Veyron to buy more Bitcoin. His advice? Ignore the altcoins, stick to 80% Bitcoin, and accumulate while everyone else is panicking. Crypto Kid notes that while the 2-week ceasefire and the reopening of the Strait of Hormuz are massive wins, the market remains hesitant. Why? Because the long-term deal depends on Trump accepting Iran's 10-point plan, which includes lifting major sanctions. His pivot point is clear. Bitcoin must break $77,000 to flip his short-term bias from bearish to bullish. Until then, he's staying cautious, despite the Morgan Stanley ETF hype. But is the war really over? Satoshi Stacker warns that this ceasefire might not be as simple as it looks on the surface. Chris points out that while markets are green, oil might start pumping again soon. Why? Because Iran may only allow 10 to 15 ships per day through the Strait of Hormuz instead of the usual 120. He also highlights a potential black swan, a new AI model that has found major vulnerabilities in crypto protocols. His strategy? He's holding his long positions, but warns that Bitcoin is currently hitting a massive resistance zone in the $72,000 range. Don't get blinded by the green candles just yet. George from CryptosRUs brings a reality check on the current state of the ceasefire. George reports that Iran is already claiming the US violated several points of the proposal. Oil prices are creeping back up as uncertainty returns. While Israel continues operations in Lebanon, the markets are starting to wobble. However, George emphasizes that Bitcoin is holding up relatively well despite the noise. His take? Stay strong. The institutional loading hasn't stopped, and the long-term fundamentals are as solid as ever. Don't let the short-term drama shake you out. Subscribe and hit the like button. It helps our channel grow. Ivan on Tech reminds us that while headlines scream ceasefire, the charts tell a much calmer story. Ivan notes that despite the news, Bitcoin is still stuck in a range. He warns against bottom fishing or trying to guess the exact low, pointing out that assets like Solana and Cardano have dropped over 50% since their bear flips. His approach is simple: ignore the noise and wait for a confirmed weekly bull flip. For him, the real strength right now is in the stock market, with the Nasdaq closing in on a major breakout. The core lesson? Follow the trend, use mechanical rules to protect your psyche, and never let a small mistake turn into a disaster. Peace or war, a solid strategy is what keeps you profitable in the long run. Crypto Jebb sees a technical trap in the current rally. He compares the charts to a classic ABC correction and believes we still need one final shakeout down to the $50,000 zone. Don't rush into a full position just yet. The team at Altcoin Daily has uncovered news that could permanently alter Bitcoin's geopolitical role. The biggest story revolves around the ceasefire terms. Iran is reportedly planning to collect transit fees for the Strait of Hormuz exclusively in Bitcoin. Initial math suggests this could bring Iran over $7 billion annually, accumulating up to 1.3 million BTC per year. This effectively turns an entire nation into a massive crypto toll booth. At the same time, Morgan Stanley, a $10 trillion giant, has officially launched spot Bitcoin ETF trading. It's more than just a product. The bank plans to build native custody, crypto-backed lending, and even staking services. The takeaway is clear. While retail traders argue over corrections, nation-states and global banks are embedding Bitcoin into the very fabric of the global economy. Let's wrap this up. Today, we've seen two sides of the coin. On one hand, the chilling macro reality from Thomas Kralow and Benjamin Cowen, warning of a potential trap and a drop to the $40,000 to $50,000 range. On the other hand, a fundamental shift from Morgan Stanley and Iran's unprecedented geopolitical play, which is cementing Bitcoin as the world's premier asset. The market is at a crossroads. Liquidity is rising, but a liquidation wick could ignite at any moment. The golden rule right now: avoid high leverage and keep a cool head. If this hive mind format brought you value, smash that like button and subscribe to the channel. We monitor hundreds of hours of content so you can get the ultimate breakdown in just 15 minutes. And most importantly, our syndicate is expanding. Whose perspective did we miss? Drop the names of the crypto YouTubers you want to see in the next video in the comments below, and we'll break down their strategies next.